The 3 ways you make money by using a self-directed IRA to buy real estate. That's today's show. Let's get to it. Hey everyone, welcome to the show. On today's show, we're going to talk about 3 different ways that kind of trump any other form of investing. You make extra money inside of a self-directed IRA when you buy real estate. We're going to walk you through that. So there's a lot of different tips and tricks and strategies that we're going to teach you. Hey everyone, I'm Clayton Morris.
I'm Natali Morris.
And in 2017, we left our day jobs in order to focus on financial freedom, which we had built up thanks to real estate investing. And one of the ways that we built our passive income and our retirement accounts is with self-directed real estate investing. We had these accounts from our day jobs, and we rolled those over into a self-directed account, which we teach you here in this video. And that's how we were able to do it. We're able to buy real estate inside these accounts.
Right. So investing inside of our IRAs is just one of many tools that we use to build our real estate portfolio. But I think it's a great way to sort of get started in your early days, because it felt to me a little bit safer to invest in real estate inside of an IRA because we weren't coming out of pocket from our living expenses to buy an investment property, and we could kind of see how we liked it. Also, we're going to teach you later how to manage that. And because you simply cannot pay your tax bills out of your pocket, you have to pay them inside of the retirement account. I found that also very comforting. So we each have our own Roth IRAs that we had taken from previous 401ks. We rolled them into self-directed IRAs. And then we both individually own a few rental properties inside of those funds. There is no such thing, as far as I know, as like a joint IRA, because your IRA is based on your earnings income. Right. If you're a person, you have earnings that you report on your own Social Security, you're eligible for an IRA. So we each have them separately. Right.
So you can't have them jointly. But maybe, hey, that's a new banking product. Maybe somebody will think of that
Could
someday.
be.
Who knows?
Yeah.
So today we wanted to talk about 3 ways that you make money inside of a self-directed account. And honestly, it's a bit different than if you just bought the property outside of the self-directed account. So let's talk about the number one way. The number one way that you are benefiting and the money you're earning from a self-directed real estate investment. Number 1 is taxes, right?
Yeah.
I mean, you can't beat it. So imagine this. You buy a property here in 2019. You buy a $60,000 property like we just did in Texas inside of a self-directed account. Well, now, every month that tenant is paying us rent that's flowing into that account, that $800,000, $900,000, $1,000 a month in rent, that's tax-free. I never have to pay taxes on that money. But now I can't touch it yet until retirement.
Because it's a Roth.
It's a Roth IRA. So I can't touch it, but that's fine. Every month I'm seeing that tenant is paying this money, and the benefit of that account grows, and I don't have to ever pay taxes on it.
Right. It's amazing.
I mean, it's a great feeling. Think about that for a second, right?
Yeah.
It really is amazing. And guess what? That account's growing. Now, let's say I bought, that $60,000 property, and after a few years, I've got $60,000 in there again from the tenant.
Yeah.
Guess what? I can buy another property.
Or what if that $60,000 appreciated and we sell it for $80,000? I'm never going to pay taxes on that appreciation. That's also amazing, right? It depends what you're doing with it.
So that's amazing, right? So you could sell that house inside of that IRA, and then all the benefits of that profit live inside the IRA. Again, you can't touch it yet.
Yeah.
But it's tax-free wealth building, an amazing, amazing strategy. So that's step 1.
Now, I have for our family, I built a spreadsheet, and each tab is whoever's IRA it is. So our 3 kids each have income through Morris Invest. And so they each do have their own IRAs, Roth IRAs. And so I manage it by keeping track of like what the investment is, what it's returned, what cash I have in there to use. I guess I should offer it to you. I should make a make a template and give a download.
All right.
I will think about that.
No, so, okay, in the description below, we will have a free download template so you can download and take it home with you. And
right,
use
and then I
strategy.
have a projection, right? So these assets are growing at, let's say, between 7 and 12%. And I have an idea of how each asset will perform. And so if I contribute the minimum amount of $5,500 a year, and my assets perform at 8%, then by the time that asset is the fund is at full maturity, I can calculate what I will have. Now, take this as an example. When Clayton was 40, he took an old 401k and rolled it into a Roth IRA that was self-directed. Now, I have a feeling that everything that I've put in that IRA as an investment is going to grow at about 8%. So I say to myself, okay, from the age of 40 until 69, if we every year put in $5,500, which is the contribution limit, we're only allowed to put that in cash, and it continues to grow at 8%, look at what it's worth here. Can you read this number?
It would be $524,363. So that $5,500 a year would grow like that.
Would grow that much because I know that the investments I choose are going to grow at about 8%. And that's conservative. I have some other funds in there that I've chosen that are, that I've sort of diversified a little. But you can see that this does own real estate. It owns 2 properties in addition to other things.
So now I can hear people at home saying, wait a second, 8% return, you're full of crap. There's no way. I can read the comments now. No, that's actually true. We invest in real estate, and most of our real estate is between about 7 to 12% return a year. An annual return, 7 to 12%, and that's taking out 40%. We take out 40% in that formula. We've got a whole video explaining ROI and understanding return on investment. So at even a minimal 7 to 8%, which is still 3 times better than the stock market, 2 to 3 times better than the stock market, that's how much just putting that $5,500 a year in would yield. So it's amazing, tax-free.
Now, I feel comfortable with that, right? And I know that if there is a market correction, say there's a housing crisis, well, so what? I'm going to keep that house and I'm still going to make rent. And most data will tell you that even in a housing crisis, rents remain relatively stable. In fact, people need to rent more. So I'm comfortable with the home, specifically this one that's owned inside of this fund. So if you look at this, Clayton's never seen this sheet before because I do it secretly, furtively doing spreadsheets in my office is my thing. And so you see I have it broken out by cash and then each asset. Now this is a property. This is a note to someone else to buy a property. And this is a real estate fund that we found, which is something completely separate we can teach you about in a different video. And then this is the cash on hand, right? So this is what we still have to invest. Now, my goal is to not have cash in there. I told you this morning, I was very uncomfortable with this amount of money there. So I went in search of another property to buy because I was like, I don't want that sitting there doing nothing. I want it growing with the rest of this that I know is doing a minimum of 8%.
So that's amazing. So we buy real estate inside of that. To Natalie's point, even in a housing crisis, people still need to rent, right? So this will still grow, unlike the stock market where we saw people's 401ks wiped away because of the collapse. So people had, their whole retirement wiped out and they had to start from scratch. That doesn't happen with housing inside of your self-directed account.
So you see along the bottom, I have it like there's Clayton's, there's Natalie's, and there's our 3 kids. So it's a great way to make sure that those funds are actually growing. It's not a lazy way. I have to go in there and make sure that there's no cash sitting there uninvested. I don't want that. But I also need to make sure that there's enough cash in there to pay the tax bill when those, or the insurance bill when those things come in. So there is some work involved, but I love it.
All right, so we got through the first benefit of buying rental property inside of your self-directed account. That's for taxes. The second major benefit, of course, is passive income, right? So this tenant is still paying you passive income every month in this property. So yes, you could have passive income outside of your self-directed account, but guess what? That passive income is now growing. It's building up without taxes every month inside of that self-directed account.
Right. So when you log into your dashboard, you'll see every month rental income on asset number 456, which is 123 Main Street, right? Income $800, right? That feels amazing because someone else has just put $800 into your IRA. Now contrast that to what it feels like to open your statement from a traditional IRA custodian, like a bank-based, stock-based. And most of the time in the upper left-hand corner, you see some kind of pie chart,
right,
which shows you like, you're invested in these kind of stocks and these kind of foreign stocks and these kinds of aggressive age-based stocks, right? And then you see like some percentages of things that yielded maybe $5 per thing, right? What you probably don't know is that a lot of times in mutual funds, they trade stocks inside of them all the time, and you are going to be paying for those capital gains inside of the fund, right? Because the fund is charging you for this. So yeah, if you just kind of like think about what that feels like, looking at your statement and saying, oh, there's some percent numbers, but I think that it grew something, versus like, oh, I got a rent check. It's a very different feeling.
Yeah, totally different feeling. So there you go. The second benefit is, of course, having that passive income, that cash flow going directly into your account and growing your account. And the third major benefit of using a self-directed account to buy real estate is, of course, protection against volatility. Volatility, right? People want to talk about inflation. Well, real estate is a natural hedge against inflation. Why? Because traditionally real estate appreciates in conjunction with, and rents also go up in conjunction with inflation, right? People aren't paying $100 a month in rent anymore like they were in the 1960s, right? Maybe some places are, but for the most part, rent has gone up significantly, and therefore so has the value of a house has also gone up. So if we have a little bit of inflation in the economy, that property that's inside of your self-directed account also is appreciating and is offsetting the volatility in the market.
Right. And so sort of speaking on behalf of the more nervous wife when it comes to investments, right? I feel much better looking at those IRA dashboards and thinking, I own a thing, like a real thing, versus looking at a stock-based accounts and thinking, well, I own a portion of a company inside of a fund managed by a bank,
right,
that's based on cyclical markets. That's not really owning a thing, right? You own the concept of a thing. Like, think of, I was one of those idiots who had stock in Enron inside of an IRA. And so then I owned no things. Like, I actually did not, I thought I owned a thing, and then poof, it was like in the air. I owned no thing. So I love the idea of actually my IRA owns something tangible that I know no matter what the market, there will always be someone willing to pay me to live there, right?
Yeah, and it can never go down to $0 in value like Enron, right?
Yeah.
Even if the house burns down, you have insurance on it and you can replace it.
I wish I still had a bank statement. I probably have a tax return that showed
and land
Enron
never loses value. So the land value itself, even if the house burned down, you still have insurance. You rebuild the house. You get it? Hopefully this is starting to make sense to you. And
right.
by the
It's
way,
owning a thing versus not owning a thing.
Exactly.
Right? I hope that really boils it down.
Inside of your account. Now, we make it super easy for you. You can go off and do this on your own. That's great. We also, at our company, we have specialists who work on self-directed accounts. So you just go to our website, morrisinvest.com, if you're interested in that. And when you click on the schedule a book a call button there, and then about 8 questions in, there's only 8 questions. I think the 8th question is, how do you plan on buying the house that you want to invest in? Just click on unlock retirement funds, 401k or IRA, and our team will take great care of you, because that's what they do all day long, is help people set up their self-directed accounts and walk through that process. We just did it. Super simple to do. Now, there's also other videos in this series and on these playlists. So if you're new to the channel, please subscribe and check them out, because we'll walk you through the multiple ways, the tax benefits of owning a self-directed account and buying real estate inside of all of that. Say goodbye, Natalie.
Goodbye, Natalie.
Goodbye, Clayton. Thank you so much for downloading and subscribing. We'll see you next time here on the show. Now go out there, take action, become a real estate investor. It's the #1 way to build wealth.